Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. I'm so happy and grateful to all of you guys to follow our channel. If you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com with the Telegram Vietnamstockmarket.entry with the phone number is +84914326556. Or you can scan the QR code on the screen so that we can support and assist you. Or you can also follow and subscribe the other channel is ArecaCapital channel. The owner of this YouTube channel is Areca Hồng Nguyễn. She's a VietCapital Securities stockbroker manager and a personal financial advisor. You can contact her with the phone number is +84914326556 with the email home.nguyen@vcsc.com.vn. We always welcome you to our office on the 11th floor, 109 Trung Đạo Street on Nguyen District, Hà Nội, Vietnam. And today I would like to show you guys some information about DGC. Đức Giang Chemicals Group is Vietnam's leading producer of phosphorus chemicals, which serve agricultural and electronic applications, among others. In addition, DGC is set to become the country's preeminent player in chlor-alkali vinyl chemicals, which are crucial to the general manufacturing and construction sectors. And today is October the 19th, 2022. With a current price of Đức Giang Chemicals, DGC is 81,500 Vietnam dong, with the target price is 118,000 Vietnam dong. And this is the report which was collected by VietCapital Securities on August the 24th, 2022. Đức Giang Chemicals, DGC, with the industry is chemicals. Current price is 94,900 Vietnam dong. Target price 118,000 Vietnam dong. Curious target price is 118,000 Vietnam dong. Upside to target price plus 24.3%. Dividend yield 2%. Now we move to the part named Sulfur Landing in 2023 forwards as GPM gallon per minute. Beat expectations. We reiterate our buy rating for DGC and maintain our target price of 118,000 per share. Our higher 2023 forward earnings forecast by and DGC higher net cash balance as of Q2 2022 are offset by our lower target. EV per earnings before interest, taxes, depreciation, and amortization of 8 times from 10 times previously, which is to account for an increase in our house free rate assumption and a projected year-over-year decline in 2023 forward to 2024 forward earnings. We rise our 2022 forward, 2024 forward aggregate core EBITDA by 14% and GPM from 40.2% to 45.3%, mainly due to our lower input cost assumptions as a result of 1. Nose-diving non-phosphate into prices, and 2. Better than expected phosphate rock cost savings from DGC's technology. Global phosphate rock prices have surged 60% YTD, which should support phosphorus prices and DGC's price spreads. The latter, giving its rising supply of rock. We expect DGC's second mine to come online in Q1 2023 and generate annual savings of $30 million, 14% of 2023 forward net profits after tax. DGC's valuation looks attractive at core 2022 forward, 2023 forward, 2024 forward, PE of 8.5 times per 9.5 times compared to a 3-year average of the peer median TTM PE of 14.2 times. Risks to our positive view, stronger than expected compressions in market price press, changes in either domestic or foreign export tariffs on phosphorus that would hurt profit margins and competitiveness. Higher electricity prices in Vietnam, a major input cost. Execution risks of the upcoming CAV project, potential environmental incidents that could disrupt operations. Production cost to decline as non-phosphate input prices slump, which is partly offset by a rally in phosphate rock. Sulfur coking coal prices have corrected 35%, 35% YTD respectively, which are better than we expected and should benefit DGC in Q4 2022. Global phosphate rock prices have surged about 60% YTD amid a supply shortage. Vietnamese, Chinese, Moroccan power rock hit 110 US dollar, 160 US dollar, and 280 US dollar per ton. 30% P205 in July 2022. However, the impact of this rally is cushioned by DGC's mines that supply 40%, 75% of the rock needed in 2022 forward, 2023 to 2024 forwards. For 2022 forward to 2024 forwards, aggregate rock cost. Although we raised our Vietnamese rock price assumption by 40%, this is fully offset by higher assumed cost savings from DGC's technology using low-rate rock. We moved off our ASP assumption as we have observed the first signs of a correction in selling price. While agricultural phosphate price spreads may remain high, industrial phosphorus chemicals are correcting. Vietnamese food producers yellow phosphorus ASPs could correct by a single-digit rate in H2 2022 compared to Q2 2022 per our estimate. We keep our 2022 forwards ASP unchanged and nudge up 2023 forwards ASP by 3%. Our projections remain conservative as 2023 forwards ASP is 30% lower than current market prices, and key 2023 forwards market price spreads 30%, 50% lower than in 2022 forwards. We forecast a larger Vietnamese market price spreads in 2023 forwards compared to pre-COVID levels due to the current steep premium of global raw prices compared to Vietnamese raw prices and booming demand for phosphorus from electric vehicle batteries. Similar to the track record of leading Chinese phosphorus players, DGC's phosphorus rock mines can substantially bolster profit margins and returns on capital. We expect elevated phosphorus GPM to continue despite declining selling price going forward. We estimate that DGC's two current mines generate a ROIC of 150% and will be exhausted in the next 6 years. I will show you the information about H1 2022 stellar results backed by strong ASP phosphate rock cost savings. Phosphorus product ASP in H1 2021 is 46 million Vietnam dong per ton. In H2 2021 is 78 million Vietnam dong per ton. In H1 2022 is 114 million Vietnam dong per ton. Year-over-year is 129%. H1 2022 or per 2022 forward O is 110%. Industrial phosphorus chemicals. Due to China's restrictions on phosphorus chemical supply and industrial and energy consumption, thriving demand from the electronics and lithium battery industries. 3. The Russia-Ukraine conflict disrupting phosphorus supply chains, and 4. High input coal prices. Agricultural phosphates. Thanks to 1. Elevated demand for fertilizers, both domestically and globally, and 2. China and Russia's export restrictions, the key sources of imported fertilizer for Vietnam and India. Revenue in H1 2021 is 3,988. In H2 2021 is 5,563. In H1 2022 it's 7,637. Year-of-year is 92%. Sales growth across phosphorus products was mainly driven by ASP increases. Phosphorus product sales volume dropped 12% year-over-year. This is because, firstly, H1 2021 was high base when DGC delivered products sold in Q4 2020 due to a container shortage at time, and two, DGC conducting maintenance of its WPA production line in February 2022. Industrial phosphorus chemicals. We note that DGC has already maxed out its phosphorus output into thermal phosphoric acid in H1 2022 compared to 20% in H1 2021 because phosphorus has enjoyed higher profits since the beginning of 2022. Agricultural phosphates. We note that DGC has nearly maxed out its WPA capacity. The upstream material for APS for agricultural phosphates. Financial income, mainly thanks to a larger cash balance. GPM expanded thanks to higher selling prices and cost savings from DGC's first phosphate rock mine, which were partly offset by surging input material prices such as phosphate rock, sulfur, coking coal, and ammonia. And this is the 2022 outlook. We lowered our non-phosphate input cost assumption. Phosphorus product ASB. VCSC comments on 2022 forward, roughly the same as current market prices. Industrial product phosphorus chemicals. DGC locks in yellow phosphorus selling prices 2 to 3 months in advance. Agricultural phosphates. DGC locks in agricultural phosphates selling prices monthly. Revenue in 2021 is 9,550. 2022 forward O is 15,551. In 2022 forward new is 15,551. And 2022 forward new year-over-year is 63%. In 2022 forward new compares to old is 0%. Industrial phosphorus chemicals. VCSC comments on 2022 forward is we forecast sales volume will increase 8% year-over-year thanks to the currently high phosphorus prices that allow DGC to operate phosphorus plants during peak hours when electricity is expensive. The company did not implement this measure in 9 months 2021. Yellow phosphorus, thanks to a 95% surge in ASB and 20% increase in sales volume compared to 2021. We expect DGC will prioritize phosphorus sales given these products' current superior profits per unit compared to other IPCs at their current market prices. Thermal phosphorics assets. We expect DGC to process less phosphorus into TPA, thermal phosphoric acids, because phosphorus has enjoyed higher profits since the beginning of the year. Agricultural phosphates, driven by higher ASP and partly offset by the maintenance of the WPA productions line in February 2022. And financial income, but in a broader cash balance amid robust free cash flow, financial expenses thanks to a lower debt balance. GPM, we raise our GPM production because of lower inputs, sulfur, coke, and electricity costs assumptions, which are partly offset by higher phosphate rock cost. We forecast GPM to widen year-over-year thanks to price improvements. And now I will show you the valuation that you can take a look on the screen. Valuation. We continue to use the enterprise value per earnings before interest, tax, depreciation, and amortization methods to value DGC's core business, and the DCF methods for DGC's one-off real estate projects. We lowered our target EV per EBITDA apply on our 2023 forward core EBITDA from 10 times to 8 times to account for an increase in our house rate assumption from 5.5% to 6% and a projected year-over-year decline in 2023 forward to 2024 forward earnings. We base our valuation on 2023 forward earnings instead of 2022 forward earnings due to our view that DGC selling prices will correct in the medium term from their current record high levels. As such, 2023 forward earnings will more fairly reflect DGC's sustainable earnings levels than 2022 forward earnings. We believe this valuation level is justified given our conservative selling price assumptions, as our 2023 forward selling prices are 20% to 30% lower than current market prices. Our comparable universe mainly consists of large Chinese firms with either an integrated phosphorus business or a chlor-alkali vinyl business. DGC's 2023 forwards, 2024 forwards PEs of 8.5 times, 9.5 times looks undemanding compared to a 3-year average of pure median TTM PE of 14.2 times. This is some statistic you can see on the screen. This is the figure 6 Summary of VCI valuations for DTC. Figure 7. Comparable universe. Figure 8. TTM PERs of DTC and our comparable universe. Recommendation history. And okay, that brings me to the end of our presentation about DTC. Thank you for your attention. Please like, subscribe, and share this video to everyone. Hope you all have a nice day. Goodbye.